Okay, good morning, everyone. You're most welcome to today's episode of the Market Snapshot. I'm wishing you all a happy new year. I'm happy to be back with you today in 2024 for yet again another episode of the Snapshot. I hope you're all having an amazing 2024 so far, and that you're all at least ready to profit this year. Yeah, so we have a lot to go through, and of course, knowing that this is the second week of the year, it's really just the start of things, and I believe it's going to be an incredible year with a lot of opportunities for us to make money and for us to be able to profit really from these markets. So really to start it off, generally we've been having a lot happening, at least at the start of the year. And of course, a spillover of a lot of things from last year. Some of them being the recent, of course, hype of the federal rate cuts. We've also been seeing what's been happening in the Red Sea, and of course, how that has affected the prices of oil. There's still a lot of risk on sentiment, especially as we are going into 2024. The risk on sentiment is still largely there. And of course, seeing that this year would be the first time that the markets at least are going into the year without a risk on event, rather a risk of event. We know that when we entered 2023, we were still seeing the impact of the Russia-Ukraine crisis. And of course, we also had the effect of what we call the great inflation of 2022. If you recall, in 2022, countries all over the world were grappling with the inflation issue, whether it is in Kenya, whether it is in Uganda. Our inflation started off in 2023 when it was really, really high. And of course, that affected a lot of things, some of those things being the currencies. Whenever inflation is very, very high, the real value of a country's currency always reduces. And of course, as we go into 2024, we are entering 2024 with almost, I would say, really little risk. There have been some indications that maybe VIX is being suppressed by the powers that be. I don't know how true that is. Of course, VIX is really supposed to show us, the kind of market sentiment that we are seeing. And of course, looking at where we stand on the fear index, we are seeing that the market is pricing in almost no fear at all at this point. That's why we are seeing the VIX index is currently at only 12.77. When we got into the year, of course, which was somewhere around this area here, you can see that January last year was not really the best of a picture. The VIX was trading at about 23. And as we were just settling into the year, then we get the SVB bank crisis, okay? So the SVB bank crisis drove up risk even more. And of course, we saw a lot of the US indices, and of course, some of the other risk on assets like gold, like the GBP USD, the Euro USD, most of them started off the year really on a fairly, bearish tone. So knowing that 2021 was a risk on year, 2022, when the Feds when we got into 2022, the Fed started hiking rates for the first time in a long time to come and to try and see if they could normalize their interest rates, above 0%, a level that was held really from the time of COVID. Okay. So now that the interest rates in the US are fairly high, currently at the target range of 5.25 to 5.5%, they want to bring them back down, especially now that inflation seems to be fairly close to their longer term target. So 2024, I would say the directional bias for most of the assets most probably is going to be a buy bias, especially knowing that we are going into an election year. which of course, when we go into the DXY, you will notice that the DXY fairly does not perform that well in election years. And of course, it's usually a time when we see fairly weak dollar whenever we have elections. The elections, the last time we had the US election was in November 2020, and now we're also going to have it in November 2024. And of course, I know the favorites for the presidential seat are someone or Donald Trump, as you may know. And then we also have, the current sitting president, who is Joe Biden. And we're yet to see if there are going to be any other candidates that are going to come and vie for that presidential seat. But for now, those are the two presidents. I do not want to take sides on who is going to be the president. Do not ask me. I know J Squad, you're most probably going to begin asking me now who is going to take the Kalulu for the presidency. But I'm not going to I'm not going to bet on anyone. We just have to wait and see. But at least I believe that the last time we had Donald Trump taking the seat, the markets were fairly excited, knowing that Donald Trump, of course, is a businessman. It really gives a lot of excitement for businesses, in terms of also policies and everything that can make businesses, perform better or, have higher earnings. Yeah. So generally, that's what we have really 2024, and we should see a much weaker dollar, and of course, a lot of trading sessions within the year favoring a weaker dollar. We should also see that even as the ECB, or for those of you that are trading the euro, should you see, of course, the ECB hinting at potential continuing with their rate hikes, or even maybe switching over to normalize rates at the levels that they're at, then of course we should then see how that will affect the markets. Yeah, so that's what we have for now. And the other thing that, of course, we have this week, of course, is the kickoff of the US earnings for Q4 2023. We have some of the big names in the banking industry in the US reporting earnings this week, some of them being JP Morgan. We also have a Bank of America. We have a Wells Fargo. We also have an asset management firm, which is called BlackRock, one of the biggest in the world. We also have Citigroup, a bank of NY Mellon, and of course, we have an airline called Delta Airlines. So now going over to see how these companies affect the Dow. For those of you that are trading indices, you should see here that United Health Group, Goldman Sachs, Microsoft Corp, and of course, really focusing on the ones that have a bigger impact on the US Dow, which of course we have United Health, which is going to report on Friday. That is before the open of the session, the US session. We have Goldman Sachs, which is also going to report before the open of the session. And then of course, we also have a few other big names like JP Morgan Chase, which is of course contributing a weight of 3% to the Dow. So should we have strong earnings from United Health and Goldman Sachs, plus also from JP Morgan, we should see a much stronger Dow in the US session. And I believe, of course, hearing from some of the big names in the industry like Tom Lee of Fundstrat. I'm sure most of you have heard about Tom Lee, who I believe had the most accurate prediction for the S&P 500 for that end of year target of 2023. So, of course, Tom Lee indicated to us that we should see a pullback happening for the indices as early as February. And I tend to, of course, side with him, knowing that we are going into earnings, we should see a fairly strong US indices. So now, for the business of today, let's see what data we have coming out for today. It's a fairly quiet day today, looking at the data. I think we have a number of Fed speakers who have been coming in and speaking, and of course, providing guidance that they are going to see if they can, turn back on the rate hikes and possibly look into cutting rates. Now, going into the US session, for those of you that are trading oil, you might be interested in the crude oil inventories that are coming out. Now, something that has been happening with the oil prices have been fairly strong, and we are seeing that they have held on to the $70 price tag, and we, of course, we are also seeing that what is happening in the Red Sea is that the Yemen Houthi rebels are really providing a lot of tensions over there. And some of the big shipping giants like Maersk and CMA CGM have had to reroute some of their container ships so that they can allow for early delivery. Plus, of course, we're also seeing that the reason for that is that it's also pushing the oil prices higher. We also see that some countries, of course, like recently we saw that there's a country, I am forgetting the name of the country. I think Rufus hinted on it yesterday, the one that left the OPEC. Okay, so some of these countries, more of them leaving OPEC, it seems to be, of course, affecting the oil prices. We are seeing that they ideally want to have more exportation of oil, but the OPEC wants them to actually cut the supply of oil, which really is providing some kind of tensions there. And we should see the oil prices, I think, continue to fairly stay higher. Now, going into later into the US session, I think the other important data we have is the 10-year note auction. So previously, these auction yield rates have been reducing. We are seeing that also the bid to cover ratios have also been coming in lower, giving us some kind of indication that the interest really for bonds by some of the big players, especially China and Japan, seem to be declining. Japan, meanwhile, took over from China as one of the biggest holder of US treasuries. And of course, we are seeing that, I think, as this BRICS block also tends to get more traction, we should see the yields dropping. So for now, we are seeing that the most recent data we got in December, we saw that the auction rate declined from 4.5 to 4.2. Should we get a much lower rate, then we should see some weakness for the dollar today, most especially in the US session, that is around 9 a.m. Okay, so let's go to the charts and see if maybe there's something that we can look at over on the charts. Okay, thank you, Apollo. Yes, yes, Angola left the OPEC. Okay, yeah, and of course, you see that you really have to side with some of these countries. I mean, if a country wants to export so that they can get more revenue and bring more money into the country, but that is not possible, then of course I believe we get some kind of some kind of like it makes it really hard for the country to do business. So I believe that's what we are seeing there. Now, let's start off with GBP/USD. So for GBP/USD, we've been having a few, I believe, liquidity sweeps. And as you can see here, the liquidity sweeps have been quite many. We had one around here where we saw that the price, from NFP, we saw that there was a big sweep to the upside. And I'm thinking, of course, as we enter the year, when we started off in January, we saw a bit of risk of selling for GBP/USD, but it's still stuck in a bit of a higher of a diamond trend, as you can see, where we are having a few liquidity sweeps to the downside, and of course a few liquidity sweeps to the upside, providing some kind of trend here. But for now, I'm expecting that we should potentially see a break to the upside for GBP/USD, potentially taking it upwards to 1.28, and of course taking over this level here that we saw. Now, as we progress through the year, we might see a fairly stronger GBP/USD, and of course the reason for that is majorly going to be due to the weaker dollar due to the elections that are going to be taking place in the US. Now, the impact, of course, from that may not come immediately. We should see that play out as we go into the year. But for now, we should see a much stronger GBP/USD. So looking back at how we saw the change of trend, if you see the chart on the daily, you will see that on the daily, we had GBP/USD getting into a tight range that it broke out of, and immediately it broke out of that range. We saw that it immediately started moving higher, and it is now progressing potentially to look towards its previous levels that it saw sometime in August last year. Now, this level of 1.31 is going to be a level to watch, especially as we go into the federal rate cuts. Should we get more rate cuts, and should we get the interest rates in the US starting to come closer to those in the UK and even possibly going lower than them, then we should see GBP USD potentially moving higher. But I think on any given trading day within the year, you might expect to see a much stronger GBP USD. So the trade for today, if we look at how it's trading today, should we get a much lower auction yield rate for the 10-year auction, which we are going to see later in the day, we should see GBP USD potentially moving higher and potentially breaking to this level here. And of course, if it manages to break here, then it's going to continue to move higher and possibly reach the 1.28 level there. So going over to the Dow Jones. So the Dow Jones, of course, right now has not yet decided to change trend. And I believe the reason for this is because we're likely expecting that we should see we should see possibly, we should see a weaker Dow starting maybe around February. But knowing that we're going into bank earnings, and of course, looking at how the Dow has managed to hold these levels here, we should see it possibly strengthening towards this level here and creating a potentially much higher level for 2024. So now, the other thing I need to mention for Dow Jones is when you look at the price action, there seems to be a lot of liquidity sweeps as well on the Dow. And of course, the reason for that is there's still a lot of bullishness. That's why we are seeing that there's some fairly strong, some fairly strong movements here, and we could potentially see it coming back to this level and breaking higher. Now, the key level to watch for the Dow is going to be this level of 37,000. So until we break 37,000, we need to clear all these buyers that are here, okay? If there are no more buyers around this level here, then the Dow is going to start selling and potentially moving much, much lower. But for now, we should see it staying higher. Okay, I don't know. I think my computer has frozen a bit. Just give me a moment there. Okay, I don't know why it's frozen. Okay. My apologies for that. I think my computer has frozen a bit. Might need to. We just have to maybe close this and reopen it. Okay, my apologies, guys. I'm just trying to figure out why I'm not getting any response on this. Okay, let me close the program. I'll reopen it again. Okay, let's open the program again. My apologies. It should be able to work now. Okay, so we are back. Apologies for that. I think there was a minor. Okay. think my computer might be having some pending updates. I don't know what's happening. Okay, I don't know what's wrong with the MT5. Will it be the programs? Okay, guys, I don't know what's happening. Uh, Give me a few moments, please. Let me just start my MT5 again. My MT5 seems to have slowed down a bit. Okay. Okay, so I think it's back now. Seems to be working. Perfect. So let me just share my screen and then we can continue. Okay, so we are back. I think we are back. So we had just concluded with the Dow. So now we are going to move over to the next asset, which is the Nasdaq. Okay, I don't know what's causing this really slow response by this thing. Okay, so for the Nasdaq, same thing with the Dow. I think what helped the Nasdaq to buy off from these levels here was majorly due to the upside what we saw on the semiconductor companies or the chip manufacturers. Okay, and of course we saw that on Friday when we had the NFP, there was an immediate buy to the upside. Keep in mind that some of the growth drivers for some of the stocks in the US, one of them is strong or stable economic conditions. And I believe despite the NFP coming in dollar bullish, we saw that the reaction was to the upside. And of course, I'm thinking since we saw this crossover of the 50-day and the 200-day, it gave us some strong confidence that it's likely that we should continue to see some potential upside move for the Nasdaq, potentially back to this level here. Now, knowing, of course, that there are a number of drivers for this index this year, one of them being the AI outlook. A lot of companies have provided guidance that this year they could potentially look into having AI AI in most of their operations. So I'm thinking the Nasdaq is still going to stay fairly strong. And of course, we have to wait and see how the earnings come out. Should we get some strong earnings, especially from some of the big heavyweights like Apple, we should potentially see a move higher. But for today, I'm expecting that we should see Nasdaq continuing to move higher, and there could be potential opportunities for us to buy when we get those sweeps to the upside. But for now, we could potentially see a much stronger move to the upside. So the level for today that Nasdaq is going to battle to take out is going to be this level right here. Okay, so if we manage to take out the 782, then we should see it potentially moving higher. But for now, these higher highs These higher lows, of course, are providing for us some strong indication that there's going to be a much stronger move to the upside for this particular index. So let's continue to look at a DE40. So for DE40, same thing, of course. We have quite a number of liquidity sweeps to the upside, and of course, it's still looking fairly strong. There's, though, however, a very strong rejection, which we saw last week on the DE40 from this level of 17,000. And I'm expecting that should we see another rejection there, it could give us another entry point for us to sell the index. But for now, it's going to range possibly higher and back to that level of 16,900. Let's cross over to gold. I'm sure gold is an asset of interest to most of you. So we can just have a look at it here. Okay. Okay, so for gold, gold has a potential W pattern formation here, where we saw it creating a higher low from this point here. But again, you can see that here, it has also created one. So I'm expecting gold is going to buy, and we should see it buying possibly back to this level of 20,052. Now, I just need to mention that gold is in a new uptrend cycle this year. And of course, the reason for that uptrend cycle has a lot to do with a potential uptake of gold by China and as well as Russia. So these two countries seem to have hinted at a potential formation of a gold-backed currency. So should this gold-backed currency come to light, it's going to provide a lot of upside momentum for gold that could allow it to test new levels. But for now, we just have to keep observing it. And I'm thinking we should see gold potentially moving and going to this area here of 20,050. So going over to Euro USD. So for Euro USD, I want to focus on these Fibonacci levels that I've marked here, but I'm focusing only on the 100 point, and of course the 0 point, and of course the 50 point right here. So if you see it on the weekly, you see that Euro USD is still trading above that upper area of the 50 level retracement. So you can see that as long as we stay above that area there, we should see Euro USD potentially moving higher. Now, I also tend to believe that going into an election year that we're also going into this year, which of course is going to provide a lot of upside potential for Euro USD, possibly upwards to 1.10 and 1.11. Now, I know the ECB has not really indicated to us that there's going to be rate hikes as yet. And the main thing to take away from there is that, yes, they might not be ready for rate hikes, but the dollar could still sell even when the interest rates or the target range for rates in the US is still higher than that of the ECB. Okay, so that's what we can expect to see there. Let's just go on the 1 hour time frame so that we can see what's happening and what could be the potential trade for today. My computer is fairly slow today, so you'll bear with me. I might be having a number of updates that I need to make, and that explains the reason why it keeps slowing down like that. Okay, I'm going to have to restart the MT5. Okay. Okay, so let me just share the screen. All right. So the 1 hour time frame for Euro USD, this is what it's showing us. Also, still a lot of indication that there's a potential upside move there. Yeah. So guys, I think it's quite clear from here that Euro USD is in a very strong uptrend. Okay. So this uptrend started sometime in October last year. We did not have any kind of range bound consolidation like we had for GBP USD. For Euro USD, it's quite clear that it's in some kind of an uptrend. And you can see here that the uptrend is still very intact from this level of 1.05, a move to the current level of about, okay, my computer is really getting to me. It's quite slow today. So we have a move here that we've had of about 400 pips, okay? And I believe that this move is still going to continue. If you were to ask me what we can expect for today, should we get a much lower auction yield rate at 9 p.m., we're going to see a nice big spike on Euro USD that's going to take it above the 200-day. Now, something that are above ZABs on the moving averages is that we are about to get a golden cross on the Euro USD on the H4 time frame. Okay, the golden cross looks like it might form any time from now, possibly maybe before CPI on Thursday. So if we get that golden cross, I'm expecting that Euro USD is going to get into a new trend that could see it potentially moving higher and see it potentially crossing over to much higher levels than it's been at. So for now, that's what we have on the charts. I'll be able to go through more the next time we meet for the snapshot. That's going to be next week on Wednesday. If you have any questions whatsoever, please type them in the chat and I will be able to go over them. Hello Malombe, how are you doing? Hey Apollo, Happy New Year. How are you doing? Hello, Milliam. How are you doing? Happy New Year. Decipher, you're saying, morning. Yesterday, I got to learn a few new details, and today I'm back for more. Great. Decipher, I hope you're having an amazing, you've had an amazing session with me so far today, and I hope you're learning so much, and I'm sure there's going to be so much more for you to learn. Happy New Year, J Squad. How are you doing? Hope you're doing great. Apollo, you're saying, what are your biggest movers this year contrasted to last year? US elections, recession fears, froth in asset prices, or what is it? I think the biggest thing, of course, for today or for this year is that as of last year, the money that was stayed in money market assets for the US was about 6 trillion. So that money has been there and has been building up ever since the Fed started hiking rates. But also a lot of investors got out of risk-on assets for over 2 years simply because there were a number of risk-on events, rather risk-off events, like we had the Russia-Ukraine crisis. People were still grappling with the recovery from COVID. So that 6 trillion has to find its way back into the risk-on assets like stocks, and of course, some of the other assets like crypto, I believe, if for those of you that are interested in crypto, you can still trade on FX Pesa's platform. If you're looking at, things like, trading Bitcoin, trading Ethereum, you can still trade that on FX Pesa's platform. You just have to search for BTC USD and ETH USD. Yeah, so I'm thinking that's what we can expect for these particular assets. And of course, I think maybe the other thing that we have to look out for, most especially this year, is going to be the US elections. So I'm thinking, of course, knowing that we're going into an election year, which is this year, we should potentially see some weakness for the dollar, which will, of course, allow us to get some good opportunities for buying assets like Euro USD, and of course, even the indices, since a lot of money is going to be made available for going into those assets. Yeah. Jessica, you're saying, how do you manage a $1,000 account? How do you manage a $1,000 account? I think, I don't know, how would you manage it? It really depends on you. It depends also on really what your targets are. Are you a swing trader? Are you maybe doing a scalping? Are you maybe looking into day trading? It all depends on you and really really on what your intentions are on the account. Okay. Yeah. So, but of course, I think the major thing is you need to first determine your risk reward. That's the first and most important thing. Then, of course, you need to make sure that you have a stop loss for all your trades so that in case the market were to move against you, then you're able to, you're able to still stay in the game. How do we see this week gold is selling so much? I think for that, I've provided some guidance on gold. So you just have to look at what I've gone through. So Apollo is saying these OPEC defections are great to tame supply lead inflation. Probably we shall see more defections, but if KSA and Russia don't increase, may not mean much. Yeah, that's true. Now, I know that Russia and I don't know what KSA is, Kingdom of Saudi Arabia, right? Yeah, I think most especially Russia, I think is really divergent to OPEC. And of course, the reason why we are seeing them being divergent is, I mean, Russia took a big, Russia, I believe, suffered a lot from the COVID, and most especially from the Russia-Ukraine crisis. They had a lot of sanctions placed on them, and you cannot now wake up and tell them you need to cut supply, yet they have a lot of oil that they need to sell, and they need to get the revenue and get Russia's economy back on its feet. So I think it has a lot to do with that, and we should see how that really pans out as we're going to the course of the year. Where do you get that information on the US treasuries? Apple, those are available on the economic calendar. So you can actually find them on the economic calendar, and you can actually be able to monitor all that information from there. I noted that last year's whole year move wasn't even 50% of 22. You'll be surprised, actually, Euro USD didn't really make that much of it didn't really make that much of progress last year. And I'm thinking it had a lot to do with some of the things like that were happening in the US. Of course, the US was still, they had their rate hike regime still going on. And should they, of course, kick off that, should they start tapering on their QT and, of course, shrinking their balance sheet, we should see some upside moves, most especially for Euro USD and, of course, for some of the other assets like gold and GBP USD. Yeah, so I think that's it, guys. Really great to engage with you guys today. Rico, you're saying, hello, Mr. Norbert, I appreciate your efforts. I really appreciate. Thank you so much. And of course, we'll be able to engage more as we go into the year. So that's it, guys. I wish you all an amazing trading day, and let's engage more next time. Cheers, guys.